Hey guys, what's up? It's Paul Salazar. I'm here with Robert Feldman, CEO of WOW's Insurance.
Yep.
We're going to be talking about the 5 steps of recovery, the current insurance market, and what the future holds. This guy is a wealth of knowledge. He spoke at our office meeting a few weeks ago, as well as the Beverly Hills Chamber event we had here.
Yep.
And everybody loved what you had to say. So
thank you.
I'm excited to have you here. Why don't you tell us a little bit about you?
Yes. So 30, almost coming on 30 years of, 30 years, man. Pause. I don't know, should I say that out loud? I probably shouldn't do that, dude.
No, you look good.
25 plus, thank you, brother, thank you. So 25 plus years, heading towards 30 on insurance and fire zones across California.
Okay.
Been in every major fire. A couple years ago, we launched a step forward, so we're a little unique in the fact that we are a wholesaler. So we do some retail, but we bring insurance companies into California.
Okay.
So the last year or two, we've been really working with the insurance market to bring things in. And as scary as it sounds, people don't believe it. I know the news says, Paul, completely something different, but there are carriers writing in California. We keep bringing ones in, and I was kind of teasing you a little bit about one we're going to talk about on this coming up on Wednesday. Some a lot of good stuff coming up. We're going to get really moving forward, and it's just a lot of good things.
So tell me how that works, because when you came into the office and you were talking about what you do, I was confused. I mean,
it's just so confusing.
Yeah. So I'm
confused.
So you're
I'm a wholesaler.
Yep. So that means that you go out there and you find
so I work with
companies to come and invest in insurance.
Well, or really one even step further. So we deal with the reinsurance companies. Reinsurance companies are ones that support insurance companies. And the famous line is the Lloyd's of London. So Lloyd's of London's are big Res, they call them, okay? And they're all over the world. We deal with Bermuda, we deal with Cayman Islands, we deal with all these different places. Germany. We have a product actually right now that we're selling on the space right now. It's taking up space. It's a Munich Re. Munich Re is the largest reinsurance company in the world. They're so large, if you look them up, they'll take over second, third, and fourth, and they're still bigger combined.
Really?
So they're just, we have a product that's A++ rated, that's right in the market right now for the middle space. It's doing an incredible job. We have 3,000 brokers appointed across California. We do a little bit of retail. When Paul calls me, everybody out there, it was just going on. Right. Hey, we'll get involved in it to help you out and make sure we get those things in place. Yeah.
So is it almost like the mortgage business? You got like the retail brokers, and then you have the wholesalers.
Yes.
Is it kind of similar?
Kind of similar.
Okay.
I would say it's a little bit, because we kind of tiptoe a little bit in both. We had to, or I wouldn't be allowed to be on this podcast. Believe it or not, wholesalers aren't allowed to talk to consumers. So that's a really crazy thing. So I'm only allowed to talk to brokers. We kept the retail side originally more so that I could still talk at your office, as an example, and Beverly Hills and all the different places we're talking now at this point. Yeah.
All right. Sounds good. All right. So let's get right into it.
Go.
We have the Palisades fire.
Yep.
The reason why you're here, as well as the Eaton fire.
Yep.
Obviously, we work more on the west side, so we got a lot of clients in the Palisades fire. I have not personally gone through there. I know you have.
Oh, scary.
It's
scary.
Yeah.
It's one of look, 25 years of every major fire. Woolsey, Napa fire, Santa Barbara fires. I was in every fire. This is by far, it's not even close. I use an analogy. I think I joked with this, Paul. I've never been in the military. Everyone thinks that I was in the military kind of the way with the haircut and all that bad stuff.
The
way I talk. The gung ho. I get the George Patton speeches and stuff. Yeah. But bottom line is I've never been in a war zone, man. That's about as close to what I think it will look like. Yeah. I mean, it's not the infrastructure. It looks like a bomb went off. Yeah. And so there's a lot of time, a lot of things. Now, we're moving forward a little bit faster, but really that kind of segues into a perfect thing. Every year, every 5 years, every 2 or 3 years, when there's a major fire, I notice a pattern. So we built a program called the 5 Steps to Recovery. And it's really crucial, because what I'm doing with those 5 steps is really, it's a chain. You can't go to step 4. You got to go 1, 2, 3, 4, 5. Okay. And what's crazy is I built it, Paul, because bottom line is there's a lot of bad information out there right now. Just from meeting you and your brothers and sisters and just talking, I've had a ton of consumers call me. I volunteer my time all the time. Everyone out there, if any of you are having problems, you can call me or email me. It's really important, because these 5 steps are the really most important things to do. Okay. Now, step 1 is pretty much done. I mean, I had one actually last week, but it's pretty much done. It sounds crazy, but the first step sounds very straightforward and basic, but it's to file a claim. You don't realize how many people 3, 5, 8 days, 10 days after the fire, they haven't filed their claims. Yeah. And until you file a claim, and until you get the claim adjuster and the claim number, it doesn't really matter. I mean, granted, it's great. There's some people that have resources to defend themselves, but it's really important to have that claim filed.
Okay. And you're in line.
You're in line.
So if you wait a week, then you're after the whole. Everybody's in before you. You're after them.
It does. And so, second thing is probably the most important step for those that lost their homes. It's just what's called certification of total loss. Mm-hmm. That's not saying, hey, my house is gone. It's not saying, hey, the adjuster saying, hey, we're worried your house is gone. It's actual documentation. Now, this fire, I use this versus Woolsey. Woolsey, I got in trouble because I was sneaking into Malibu early and taking pictures. And taking pictures of it, just send to adjusters to certify total loss. CAL FIRE did an incredible job. There's a drill down feature. You can go on. We found out as the fire broke out, this happened. They were certifying that, in essence, putting pictures up showing if it's total loss, partial damage, or standing. And so we were able to use the pictures. Why it's important to have that certification of total loss is once you have that done, they're going to give you a certain percentage of your additional living expenses, and they're going to give you a certain percentage of your personal property, which allows you to get to step 3. Okay. Step 3, Paul, is where you guys come in.
Hold on.
Go.
Step 2.
Go.
Google Maps has now updated their maps.
Yep.
And you can see almost everything, right?
Yep.
Can you use that?
Yes. Okay. So any picture, and the key thing, Paul, I would say, Paul, is you got to really pay attention to this is it's got to be certified. So you have to be very poignant with the adjuster. Here's a picture showing my house is a total loss. Can you please certify my home as a total loss? It's a regulatory thing.
Okay.
Because it's 25% of additional living expenses, 25% of your contents coverage has to be awarded to you the moment they certify, basically within
within
a number of days.
You get a check. Okay.
Within a number of days.
Okay.
And so it's important to certify because, I always say this, Paul, look, claim adjusters, man, are overwhelmed right now. I don't care what company it is, the whole story. They're human. So everything I tell consumers and clients alike that you can do to help a claim adjuster along. I mean, they're having people freaking out on them all day. Send in a simple email saying, here's a picture of my home showing it's a total loss. Can you please certify as a total loss? Guess what that does for the adjuster?
Easy.
Check.
Yeah, easy.
It's a check, easy, done. The third step is where I would say we team up as cousins, meaning insurance and real estate.
Okay.
That actually is the third step is really starting to bring normalcy back to the individual. It's getting them somewhere to live.
Yeah.
So by certifying the total loss, now you're opening up and exercising that long-term housing. You can get people into and start looking at long-term housing, which obviously is difficult right now with we're not even going to go down that road of all the stuff. That's a whole other podcast for a different day.
Oh, yeah.
And it's not me. He's going to talk about that one.
No, it's a long one.
Long one. Yeah. So third step's done. Fourth step's going to seem premature. 4 and 5 are kind of tied together. It's having an architect and having a builder. Now, there's some great companies out there that are doing it. For those who are in the letters, as they call it in the Palisades, if you guys, got a call. If anyone has a problem, I have a ton of people that are doing this. I work with a lot of developers. There's a couple of ones I like a lot. There's some I kind of stay away from. There's a really big builder that's going to do things for partnering for people. So if you get 10, 12 people, it helps drive the cost of the rebuild down. On this kind of thing.
On the same street?
On the same street, or roughly same area.
Okay, got it. Yeah,
you can't be 20 minutes away.
Of course.
But I mean, again, this is what I'm trying to unify people to do, because if you can get the architect builder and start building at the same time, the cost per square foot goes down when they're building 10 homes or 30 homes versus one home.
It's like a truck. It's like a KB home or like a
and they could all be different plans, mind you.
Exactly, yeah.
But it's still, if you're having someone pour foundations, as we both know, if the foundation is being poured for one, it's a higher cost than 10, it's a higher cost than 30.
Yeah.
And this is not being said right now, Paul, and it's a lot of things. I've been helping people get to the right spots. I don't have a preference to it, as long as they're moving, and I make that comment at 4 and 5, is I always say it's the tough love conversation. I'm going to give them a virtual hug when I'm talking on the phone, and they think they always go, oh, Robert, you're giving me a hug. I go, well, it's to pick you up off the ground at the same time and get you moving.
Yeah.
The reason why 4 and 5 are so important is it also, once you have that stuff all the way to plan and done, your builder can start to file permits. You and I both know being first in line is a lot better than being number 5,000.
Especially with the city of LA.
Okay. Second thing is it will help be able to maximize your coverage. Most insurance policies use $1 million rebuild. You have $1 million of coverage. most insurance companies have a 20 to 50% extension in case you're short on coverage. So by having your bills 20% to 50%.
Oh, that's a lot.
Yeah, so it could be a lot. Yeah. So what happens is by getting your home, so let's say the bid comes in at $1.3 million to rebuild your house in that example. Mm-hmm. I mean, I don't know if there's much in Palisades that's doing this, but I'm using round numbers here.
Yeah, it's fine.
Is you might have a company that has a 50% extension. They would extend up to the $1.3 million to pay you the total resources to do so.
Okay.
It's really important to know these things.
And I like what you said earlier, because if you're able to team up with a bunch of neighbors to hire the same architect and builder, and your costs go down, you're saving money in your pocket, because the banks, the insurance company is only going to give you a certain amount.
Yep, it depends on the company, obviously.
Yeah, of course.
And there's a lot of people, Paul, I'm sorry to say this, I saw it beforehand. I had people, there was no part of the Palisades that could not get an insurance policy. There's the whole thing about people being canceled. Yes, there was cancellations going through different companies.
But there were still insurance companies
We
out
had,
there.
as a wholesaler, there was not a home that couldn't. Now, if the price was X, it might have been 2X or 3X, but at least they had the ability to get it. Not getting into what the pricing was, it's just, that's what it is. So, but long story short, there are a lot of consumers, I'm sorry to say, that still prior to would argue with me that $250 a square foot could build in the Palisades. And I used to go, we're not interested. Yeah. And so there are people, we as a wholesaler, we'd have brokers bring consumers to us and saying, we want to get into one of your programs, we're wanting this at $250 a square foot. We would be setting it at $500 a square foot going, that's our minimum floor. And I'm sorry to say we were right. And the builders coming back now showing that. Yeah. So those are the ones that are actually the ones that really need the help also. So by getting in with 8, 10, 15, 20, 30 in an area, the more you get into, if they can coordinate a build, that's not going to save, it's not going to get them down to $250 a square foot, but it's going to bring them down exponentially.
Yeah, at least what, 10% maybe?
Oh, it could be 20%.
Yeah, 20%.
It makes a big difference. Think about it, $500 a square foot.
Yeah.
Get a 20% reduction. It's $100 a square foot. That's huge.
Yeah, on a 5,000 square foot house.
Dude, it's
a lot of money.
$500,000.
Yeah, for sure.
That's a swing.
Okay, so stage 4 and 5 is picking your architect and builder?
Yeah.
Okay.
Now, I'm really careful to point this out, because with a lot of the people in Palisades, there's going to be a situation, you have to make sure when you talk to an architect, which is important to get your plans redone, you also need to verify what builders they work with. Mm-hmm. And the reason for it is, some of the dangerous parts of it is architects can build anything you tell them to build. Mm-hmm. And the problem with that, and they'll stay within the 10% rule and they'll stay within all the rules, but they'll put things in that then they have to go back for 17 revisions because they're not having a builder involved at the same time. Some companies have it as part of, they're all one stop. Some of the big builders, which I personally like, again, we were mentioning, have the architect and builders all in one company. That way we have to go back to 17 revisions. That hurt a lot of people in Woolsey. It hurt a lot of people in Napa. It hurt a lot of people in Santa Barbara, was they were going back and saying, the builder's going, okay, if we do this, you're now at a $2,000 per square foot house. Is that really what you want to do when you have $500 in coverage? Yeah. And then they were doing revisions and things. And every time you revise with an architect, as you and I know, as more money goes back, it's a revision. So it's having them coordinate. So there's, in a utopic situation, you have 0 revisions. Yeah. It's the architect, builder, and you as a consumer talking at the same time.
All together.
Got it.
Sounds good.
Yeah.
I was talking to Peak Projects, and they do a lot of these. They're project managers for big estates.
Yes.
20, 30, 40,000 square foot houses.
Yeah, big houses.
And they were telling me that they're probably going to see some of these bigger development companies come in, buy a bunch of these lots here. Yeah. Like KB Homes. And have you heard that?
No. And actually right now.
Do you think that'll happen?
You know what's funny? I think it's going to be more of the Eaton fire. I really do. And the reason for it is, I think we can both agree. I was seeing some lots. Some of the homes, even on Letter Street, were what, $3, $4, $5 million homes?
Well, the median price.
Yes. It's a question I'll ask you.
Last year in Palisades was $4 million.
Got you.
In Palisades, $4 million.
$4 million.
The median.
Yeah. So it gives you a point. Yeah. So the lots are not going to be as cheap. I think in some areas, I've seen this in Northern California with like the Paradise fires and things like that, where developers just walk in and buy up. Yeah. Because what happens is the lots are $100,000, $200,000, $300,000. They can buy them in wholesale. Yeah. When you're getting into lots that are $2 million, $3 million.
Yeah. That's a good question. So I've already had a couple clients ask me, hey, what's my house worth? I'm not sure if I'm going to rebuild or if I'm going to sell the land. We've only seen 2 properties that have hit the market that are fire, sales, land sales now.
Not a fan, by the way.
it's too soon, right?
Yep.
Okay.
And here's why. Because remember I mentioned to you earlier about the insurance policy about the extension and replacement costs?
Yeah.
So let's say, for example, they're with Allstate, okay, and they lost their home. And their policy, again, I'm going to use that $1 million. And the rebuild comes in at $1.4 million. Well, Allstate has a 50% extension. So if they sell their property, potentially, if they're just going to take the cash and go, they're going to leave probably $400,000 on the table.
For the extension.
You got it. And other coverages. So what you generally want to do as a consumer is you want to go all the way to plans, whether you want to or not. So I'll ask you a question. How much easier is it for you as a realtor, Paul, if you already have the permits and plans to build a house versus an empty lot where the person has to buy it and go file for permits and things? Yeah. Which is easier?
Well, that's called RTI, right? Ready to issue.
Yes.
So there's a lot of those houses, and there's actually developers and investors that just do that.
Yes.
They'll buy a piece of land. They'll either tear the house down, right?
Yep.
Or keep the house. They'll get an architect. They'll do all the plans, and then they'll sell it as an RTI.
Yep.
Ready to issue permits. That way, the new buyer can come in and just day one start building right away.
But correct me if I'm wrong. It's a higher value.
It's depending on the house, 10 to 20%.
Got it.
Which is a lot of money.
Well, think about it though for a second. Using the insurance company and using the money to get your architect and builder to build gives you this additional 10 to 20% on a lot. Maybe it's $2 million. 20% is $400,000.
And then you sell it. Oh, see, I didn't even think about that.
That's a huge difference.
And
huge.
the insurance company will pay.
Well, usually as part of your structure coverage, but remember you have that. Most companies have that extension, so it's going to help you. So I've had consumers go, Robert, it's $100,000 for me to run the architectural plans, get everything put together. Exactly. And I go, okay, and I look at their policy and I figure out, I go, but you're missing $700,000 on extension.
So he's losing all that money basically.
So my comment is if you're short, they're going to extend up an additional $700,000 example. Well, that's part of your $100,000. So why would you ever pass that up?
Yeah. So let's go a little bit deeper on this extension because I've never heard of this until
every
now.
Policy, even the Cal Fair Plan, which has you and I could do a whole podcast on Cal Fair Plan. Might need to be a different day. Right. You got to do a different day because that's a whole subject. So I'm going to say everybody but Cal Fair Plan. Okay. The majority of companies, admitted carriers, Farmers, State Farm, Allstate, AAA, Travelers, everyone you want to name has a policy limit. And then it was called extension of replacement cost. Different companies call it a building structure to reimbursement extended limits. Everyone call it different things, but it's extension. If you look at the front line of a policy, so if you had a policy, we lay one out in front of me right now. The very first thing I always go to is what's the A coverage, that's structure. And then usually the line right below it is a subline. It says it's some kind of an extension, whether it's 120%, whether it's 150%.
So it's right below.
It's right below
coverage
it.
A.
Coverage A. And so it'll tell you, or sometimes some companies spell it out as a dollar amount. And so I had one client that was going through it, and I'm going, we're just going to. And one of the things I understand is, elderly. It's people have lived in the Palisades for 50 years, and so there's a lot of people. My comment is, I'm not a fan of public adjusters when it's a total loss. The exception to that rule is when it's for a senior that potentially can't defend themselves if they don't have someone like me or someone else helping them through the claims process. So on a partial loss, I think public adjusters can work fine. There's a ton of them that are going to be dealing with smoke damage mitigation things. Public adjusters can get things done. That's a great thing to help. But on a total loss, when people are short money and trying to rebuild, I don't like to see an additional 10 or 20% going to a public adjuster.
Yeah, that makes sense.
Yep.
Okay, so if you try to sell your property right now and you have this extension for $500,000.
Yep.
And you end up selling the property, you lose out on
potentially
on that whole
potentially
amount. And you keep it for expenses that have to do with the rebuild cost.
Well, usually what happens is your structure coverage, A coverage, is for your structure being rebuilt. So there's usually separate coverages for debris removal and all these other things. But the architectural plans, as an example, is part of your structure coverage. Well, again, if it's $100,000 for your architectural plans working with the builder to build these things, and they build out the architectural plans, and now you're short $100,000 and you have this extension, they're going to extend up to make sure they cover out what that is. So there are going to be a lot of people that are going to be short still even with the extension. But even still, if getting through the architectural plans and maximizing your dollars from the insurance company is by far everybody out there's most important. That's why I looked at the camera. It's the most important thing to do. You got it.
That's a great point, and I appreciate it. I didn't think about that.
It's okay. That's the thing.
So when I'm evaluating some of these lots, and I don't have a lot of data points yet. Because there's only been one that's on the market. It's about to close soon. The other one just came on the market on McKendree for like 2.9. It was a house that I showed that was for $9 million, like a newer build, right?
Think about this. Think about that for a second. $9 million. Now it's $3 million. That's a $6 million haircut. Now, very rarely will the policy equal $6 million.
The whole policy. Wow.
So think about that. Not personal property. Throw that out. I'm talking about $6 million for your structure. You're taking a haircut. So they might have had $4 million. So they're now they're losing $2 million because they didn't go through and rebuild it.
I mean, it's not my client.
No, I'm using an example.
That's a great example. Because
it's a haircut.
Because they're not selling with plans.
They're not selling with plans, or they're not even building it back. Because you and I both know a 2025 or 2026 built house is worth more than a 1990 house.
100%.
So what happens is when you rebuild, that's what I always hold my breath and have to really almost again that tough love hug and go, we're going to get you up off the ground. Hell, I don't care who the builder is. I don't care who you go with. Build the house. Grab someone like Paul. List it never go back in the house, but at least build it. Even if it takes 3 years, 4 years. Get with somebody. Get with it so you can have your team. You can have it lined up.
What are the pros and cons of, so you got people, there's a lot of older people, like you said, that are, been in these houses for 40, 50, 60 years. They've moved now to, a lot of them have moved on to like adult living facilities, That
becomes the family's issue.
Exactly.
So a family usually, because you'll have at that point, usually, this is not my expertise, I'm not a living trust person, but usually a power of attorney, you'll have things where they will step forward to really help with that process. And families can do it. You can have powers of attorney to continue on. Actually, I would make an argument when the senior goes to a facility, as long as they have a capable individual defending them, meaning a child or an attorney. There's a lot of clients that have hired attorneys. I've got great attorneys I refer to all the time. I know kind of who's the good ones, who's the bad ones, just like the builders. And my big thing is, I'm like, hey, look, you can hire an attorney just the same. They have to represent you. Now, if they're in a facility because there's issues regarding dementia or things, that's a different conversation. Capacity becomes an issue. But if it's a person that's just going to a facility, I would even argue even more so, how can they afford a lot of times in that example, to lose $2 million? So if you had an investment, let's use the example of 4 years, Paul. It's going to take 3 years for that house to be built, and they go into a facility, but they have someone representing them, and they get an extra $2 million.
Over the course of 4 years.
Over 4 years. What kind of investment is that?
It's a great investment.
I mean, dude, I don't know about you. Man, can I have 10 of those?
Exactly.
I'll take 10 of those, man. $20 million. And guys, I will be retired and I'll be doing barbecue instead.
So even those people you're advising, get the plans approved, and sell it with all the plans ready to go.
As a minimum, or build.
Or build.
Because what's going to happen, the banks are already lining it up. So there's going to be a lot of construction loans and things of that nature they're going to go. Obviously, again, like you had mentioned, Paul, and I thank you for confirming this. A 2026 house is worth more than a 1990 house, okay? And things up to code and all these things that are different and building it out brand new, this is a major difference, boss. When you have that, that's a major difference. So let's talk about something that's important. So we said 2026. So let's go to the future. Okay, we'll talk about current insurance market future, because as a wholesaler, we bring carriers into California. I'm excited. I got mentioned to you Wednesday, knock on wood. I don't know when everyone's watching this. Hopefully it's sooner than Wednesday, but if not, you might be coming back giving a smile and they'll put an addendum on it saying, hey, Robert got it. We have a carrier that we're signing that's going to release 500 to 1,000 homes across California. It's a very unique approach. We're going to be working with realtors. We're going to be able to give offices codes so you can actually, for consumers that fit the criteria and get in. It's going to be an incredible process as a wholesaler. It's a next gen approach. But we've got 3 or 4 other companies that are in right now. Our own WOWS program. For those that can't go to sleep tonight, go listen to the WOWS program. It's the joke, Paul. I'll put you to sleep with a deep voice. And so my joke about that is we're changing the tides. Insurance policies are back. They're getting pricey. If State Farm just announced a major rate increase, that even though they're out of the market, different carriers are pulling back. We're going to continue to fix the market. We're not just fixing it for California. There's an interesting stat. I have the Department of Insurance in Nevada, who I love, those guys over there. They're asking for help. There's 8 states that are all asking for help right now. So they're all 8 states.
And what are they dealing with in terms? Are they dealing with
same
fires
problems
too?
Well, like northern part of Nevada has Incline Village, Lake Tahoe, all fire. Washington, Oregon have a problem. Utah, Colorado, you get into the states. Even Hawaii is an example.
Yeah, Hawaii.
So we're continuing to build things out. We're continuing to do stuff. And when we re-engineer insurance, that's a podcast for a different day. Yeah. It's a really great approach. We've got it. We've been able to prove it works. And so now we're bringing more and more companies in for the homes. We'll be copied a lot of things, but we're still holding other carriers as a wholesaler to be. I mean, I have one that just took a house from State Farm. State Farm took their rate to $19,000 in Calabasas. This company was higher in coverage and was at $6,800.
Wow.
And it's an A plus.
So better
policy,
limits.
Yeah, better limits.
Better
but they're selective.
And lesser.
They're selective. So it's not going to be 20 homes on a street. So so that's the problem. So we're bringing more and more carriers in.
How do they select? How does that work?
A lot of it has to do with fire hardness, Paul. That's going to be the next gen. That's the future.
Okay, so let's
talk about this. Yeah. So what's going to happen coming soon, and you're going to see as carriers, I continue to bring things in. It's going to change, especially when you get into that 8,000. As you get into that bigger homes, 6, 7, 8,000 square feet or larger, it's going to change. The model's going to change. We've been helping change it. It's ridiculous to have a cookie cutter approach to every house. Yeah. Some houses are incredible when it comes to fire hardening. Some homes, right next door, has no fire hardening. Yeah. And anything. Well, how is that the same rate for the same? You can't do that.
Exactly.
So what's going to happen is there's going to be a major change going forward, and everyone needs to know this. The preparation is going to take a lot of time. Really, what you guys have done forever as realtors. Okay, the insurance world is just finally catching on, Paul. Okay. So what the very first thing we're going to end up doing was called a high value inspection. What that's going to do for the bigger homes is going to do an inspection, interior, exterior, set the bar. This is what the rebuild cost is. This is what all the parameters, the detached structures, all the things, and then we're going to wash it through one of the biggest companies called CoreLogic. So CoreLogic has its own company number. This independent 40, 50-page report, consumers are going to pay for those to get them ready. Yeah. So it's going to build a portfolio. So then the second step is to bring in a fire hardening company. I have one that I love, that a lot of the reinsurance companies love, and what we're going to do is we're going to have them come through and build out a whole fire hardening program. Are the plants too close? Does this tree need to go? What's the story? Okay, because there are policies now that are $200,000, $300,000, $400,000 policies that should be $30,000, $40,000, $50,000 policies, and the reason why they're not is that they don't have a fire hardening plan, they don't have a high value inspection, and the last part, there's a company I love called Komodo. They don't even know I'm an unofficial rep is the joke. Yeah. I talk about them all the time on podcasts and everywhere else in the world, kind of stuff, and they don't even know I'm mentioning them. They actually have a biodegradable, non-combustible chemical out of orange peels and stuff that keeps the house from burning. So some of the houses that made it,
so it's a material.
It's clear.
Okay.
It's clear. You do it in August, September, when we have no rains and we're super hot. And what it does is, it's because the reason why you have to do it at that time period is you have to do it then because if a major rain like we just had would wash it all away. So you want to get it
when it's been dry
and hot, and or
and
just dry.
What is it, like a mist that you spray on your house?
It's like a mist thing they put on it, and what it does, you can take a blowtorch. I've watched them do the things, and they hit it with trying to go to it. Fire won't go anywhere near it. It ricochets off the house.
No way.
It's incredible. These are 3 techniques that could potentially save somebody 50%, 70% of their rate.
If you do it every single year,
got it,
and you prove it to them, hey, this is the receipt.
So we have a contract for this situation. These are things that we'll be talking about. Obviously, is your expertise. You have a lot of consumers that rely on you for, hey, man, this is getting crazy. What can we do? We're going to make sure we point these things out to really get them in the market.
I think that's a great point because you can't see the same thing happening again.
Can't. It's Einstein's theory of insanity, Paul.
And it's only a matter of time until we have a long period of no rain and a really high wind.
We can't defend wind.
You can't defend wind.
Which you can do 2 things. When you have a major fire like this, 1, The fuel lines. That, again, is a whole other conversation for a different day, okay?
The fuel lines?
So basically, the Palisades fire got a 5 to 8 mile run from the Getty Center through all these hills and areas I like to hike. Got to tumble for 5 to 8 miles, getting hotter and hotter and hotter. And it blew into, have you ever seen the videos, where it was like, it looked like just scorched earth. It looked like hell on earth was blowing through it. Well, that's coming from 3 miles away.
It shouldn't happen.
It shouldn't happen.
So you should have fire.
Clear fire things. That's one part of it. The other part is, okay, let's have a house that has a defensible situation where it has a Komodo or some type of frost check system or things that makes the house hard to burn.
Yeah.
I mean, really, really hard to burn.
Like, what else can people do besides not have dry trees close to the house? But like,
there's a whole fire hardening. That would be a whole other conversation for a different day.
Okay.
And what I would say though is, but that's going to be the next gen, Paul.
Yeah.
And what happens when we get there? That's the difference of $20,000, $30,000 policies and $100,000, $200,000 policies, or $50,000 policies to $500,000 policies. I mean, there's a big spread.
Yeah.
If we can prove and demonstrate fire hardening, as this is a fire, we're building fire mitigation plans.
Yeah.
So it's not just, hey, send in your address with a person's name like the old days, right?
Yeah,
remember me? Old days, 20 years. It used to be name, address, put in the date of birth,
and that's it.
And some things, and there's the insurance policy. Well, you can't do that anymore. Yeah. You got to it's going to be very portfolio built.
Yeah.
6,000, 7,000 square foot house. You have houses that are 8, 10 million.
Yeah.
That's going to be a house that we're going to have to build differently, similar to what you guys do now. You guys do these beautiful books on homes, the selling why. Yeah. Well, we're going to take a part of that along with a high inspection report, a full inspection report, fire hardening, and a plan being instrumented, and then take all that as one big thing and take the insurance company and go, this is why this is a 0.5% rate, not a 2% rate.
I like that.
Big difference.
It reminds me of when you get trying to get a loan.
Yeah.
Right? And you're like an entrepreneur.
Yes.
And you have to give them your
You have to build the
whole story.
You have to build a story.
Yeah, and you have to shop it out to the different, so it's the same exact thing.
Same exact thing.
That makes sense.
Yep.
Yeah, because in the past, like you said, it was just address, name, date of birth.
Cookie cutter. Whether it was a good risk or bad risk, if it hit this criteria, it just fit.
Yeah.
Because people were just going off just fire scores alone.
Mm-hmm. Yeah.
So there's going to be things like mitigation could be, hey, you've got 100 feet of clearance. We need you to be at 200 feet of clearance or 500 feet of clearance. Mm-hmm. We're going to want you to have your association clear down. So we might have parts of LA where they have associations that are part of association land, not of the individual homeowner.
Okay.
And we're like, okay, we're going to have to go and talk to the association and go, guys, the consumers are going to pay for this. They're going to push this thing out 500 feet to be able to defend the house. Yeah. There's just a lot of things we have to work on to get together as a team.
Well, that's smart. Do you think the city of LA or the county are going to make changes?
Well, it's funny. That's the big thing, Paul. I've been lobbying for a long time. I felt like the boy cried wolf, and finally the wolf showed up. Okay, there's going to have to be involvement. Yeah. I'm going to say this terribly. I'm not political at any stretch of the imagination, but you can spend a penny, could have saved millions. Yeah. This is billions of dollars that were lost because we just didn't mitigate for 30 years. Yeah. Now, here's a really interesting story. A company called Burnbot, Paul. And I know we're on time. I'm going to be good on time. Because you get me wound up, Paul. I keep going. So mitigation is going to be a big key thing. So using that example, the Palisades, there are companies that do a lot of clearing, or this incredible company, Burnbot, where they actually have, it looks like a Tesla truck. Okay. It's a miniature version. It rolls over, it burns, puts all the smoke and ash into the ground to revitalize the ground. It moves slow so all animals can get out of the way of it. And what it does is it revitalizes the ground. But once you do this, do you know what the cost they were telling me is roughly to do it the second year after you do it?
No.
10% of the cost.
Okay.
So once you spend the money, having someone go out there once a year to mitigate and make sure it stays in line is going to make it you take the fuel line out, so you can't stop 100-mile-an-hour winds. No. But boy, you take the fuel line out where there's no thing to burn.
Yeah.
Now, fire can do what it wants. It can't travel 3-4 miles without having the engine to go through it.
For sure. And it say if the fire started here and it was going this way, and all these houses had the fire hardening, then you're not going to burn the rest of it. It stops right there.
It stops right there.
Yeah.
It just gives a better way.
Yeah, for sure.
It's just all the stuff we're going to be talking about going forward, Paul. Okay. It's going to be, you and I should talk many times. Keep giving everyone updates because
for sure.
There's a whole lot of things we got to continue to talk about. Cal Fair Plan is a whole other subject for a different day.
Yeah.
Things like that. But the future is better than people believe.
Okay.
And that's why I keep stressing everybody, hey, look, it's going to be there. We just got to continue to get better. It's got to be a group. It's got to be government. It's got to be consumers. And it's got to be insurance. And we all got to play in the same sandbox.
Yeah. Work together. All right. So we talked about the 5
steps.
The 5 steps.
Yep.
Of recovery.
Yep.
We talked about the current market, and we talked about the future market.
Yep.
What are your thoughts on the rebuild of Palisades? From what I'm hearing about 50% of people are not going to rebuild.
Well, what happens is, I think a better way of saying it is someone's going to rebuild.
Correct.
So the question is, are consumers coming back that lost their homes, or were they selling their lots? I still think, as we talked about earlier in this podcast, I know there's going to be exceptions to the rules. For the 90%, 95%, they should go through the process of rebuilding.
Yeah.
And so if they don't, I'm sorry.
At least get the plans approved
or something. Try to get. There's a value,
but don't try to sell it without any plans.
There are people trying to sell right now without even the lot being cleared.
Oh yeah, for sure, 100%.
And so, that's a level. That's a. Yeah. If you just wait for the Army Corps of Engineers to show up, was it going to be 6 months? Okay, so 6 months.
Yeah. Is that what you're hearing?
I've heard all kinds of things.
Yeah, okay.
One of the things I keep hearing about, which I'm pretty happy about too, is they're starting to open up the ideas. If you get through steps 4 and 5 with your contractor and things, you can file for permits and have your builder go in and clear.
Okay.
That's another process. They can test the foundations and do all that good stuff. That becomes a big part of it too.
Yeah. And also money out of your pocket compared to money from the government.
Well, but here's what happens. If you have a foundation on one of the letters, that foundation could still be good.
Yeah.
They don't care. They scrape it and it's gone.
Yeah.
So there are people in Woolsey that I still talk about that got stung because they got hillside foundations yanked and the pylons yanked where they could have easily kept them in.
Yeah, that's a lot of money.
Could have kept them in and just cut the surface or cut it a certain way not to damage the pylons and then reattach to it. People got beat to death. So it's a bad thing.
Okay, that's a good point. Thanks for coming in, Robert.
Oh, no, the honor's mine, man.
I really appreciate it. How do people get in contact with you?
Absolutely. Easiest way, obviously, is you can go to our website, WOWS Insurance. So everyone forgets the S. WOWS Insurance.com.
Okay.
My email is robert@wows, WOWS Insurance. Paul, after the meetings, man, I've been answering every day 200, 300, 400 emails a day. I'm just answering them. I stay up until midnight. I have consumers come to me and go, hey, man, you answered me at 5:30 in the morning. I go, I was on my way to the gym and finally got to your email. It's, hey, man, we'll get to everybody. We're going to help because there's just a lot of bad information we got to get out. Man, that's just a big thing.
I appreciate that.
Hey.
Robert, thanks for coming in.
Man, thank you.
I appreciate it.
Hey.
All right, guys, thanks for watching. If you have any questions, leave a comment down below. Are you on Instagram? Or?
Yes.
Okay.
So the fun one we did for everybody, because as you see, it's
the barbecue.
The barbecue one, but it's got all the 5 steps that everyone wants to find. If you want to go get a copy of it, it's on Instagram, Bob, so BOB, period, B as in barbecue, period, QUE. Follow me. We'll send out information. We'll follow you back. And I appreciate it.
Okay, sounds good. Thanks, guys, for watching, and we'll catch you next time.
Thank you.
Bye.